right, so this is another Chapter 10 topic. So this is depreciation about real property. And so remember, when we talk about real property, we are talking about tangible property for sure. And this is property that, again, is used either as rental property or used in business. So, whoops. I have to select a pencil. You cannot depreciate personal use real property. Similarly, you cannot depreciate land. All right, so if you have a building and land, you're going to have to separate them out. All right, so we talked about depreciation conventions with personal property. And remember, there are two different conventions with personal property. With real property uses what's called the mid-month convention, and it's depreciated via straight line. Okay, so you have different useful lives depending on the type of real property we're talking about, residential versus non-residential. And then you have things that are non-residential placed in service before 1993 and things placed in service after 1993. Okay, so you need to pay attention to those. All right, one thing to be careful with when you're looking at these charts, hold on, and let me scroll to the charts. All right, so when you're looking at the tables, I'm going to scroll for which chart you're looking at, okay, versus which one you need. All right, so let's do an example. So on July 12th, Scrap Happy purchases and places in service a warehouse and the land it resides on for $170,000. All right, so it purchases land and a warehouse. It tells us that $120,000 is allocated to the building and $50,000 is allocated to the land. What amount of depreciation, what is the amount of depreciation on the property for the first year? Okay, remember, you cannot depreciate land. All right, and so how do we figure out depreciation? So depreciation expense is equal to the depreciable basis times our percentage. Okay, that's all you got to do. So what is our depreciable basis? Well, we're talking about the building. So that's $120,000. All right, and now we have to figure out, remember, real property uses the mid-month convention. Okay, so what does that mean? That means that for the year that you place this thing in service, okay, mid-month means for you get to recognize depreciation expense for half of the month that the asset was placed in service. Okay, that's what mid-month means. All right, and the table does that for you. We're going to deal with disposition here in a couple of slides, and we'll talk about what happens in the year of disposition. Okay, but right now we need to figure out our percentage, okay? So this problem tells us that they placed it in service on July 12th. So we need to go and look at our chart for non-residential real property, mid-month convention, straight line for assets placed in service on or after May 13th, 1993, okay? And now we place this thing in service in July. So what month is July? July is the 7th month, okay? So that's our column. We're talking year 1, okay? So our percentage is 1.177%. So that's our percentage. 1.7, whoops. I read it off and then I said it wrong. 177%. Okay, and we do the multiplication on that. And that gives us $1,412. That is our depreciation expense for year 1. Okay? Now, the next bit more here. Okay? Pay attention because you'll notice attention and make sure you read the heading. The slides are all the different charts, and remember these tables are located on all of the tables look fairly similar. Look pretty similar, so pay Canvas. And they're in a file. Okay, so I'm just scrolling through them right now. In the schedules for exams, and it's labeled makers. Okay, they're also obviously in your PowerPoint. So let's do one more example. All right, and so this is that same company. So we've got Scrap Happy, and we've got the same warehouse. Okay, and so I've just repeated the information. And then what is the amount of depreciation on the property for the first year? And remember that was $1,412. So we already know the answer to that, all right? And then the second question that I've added here says, what is the depreciation expense for year 4 if Scrap Happy sells the warehouse on April 15th of year 4, okay? And what I've added here are 2 charts, the depreciation table that you've seen before, and then this other little insert from the book, okay? And what this other little chart does is corrects for mid-month convention in the year of disposition, okay? So this corrects to mid-month for year of, and I'll just say year of sale, because in our situation, that's what we're going to be talking about. Year of disposition could be maybe it gets destroyed by a hurricane or a tornado and it's disposed of via a casualty loss. But in our situation, we're talking about selling things, okay? So let's learn how to use that. Now you can do the math on mid-month depreciation, the conversion, without that little formula, but you will have access to that formula on the exam, so it makes sense to put it here and talk about it, okay? So again, what are we calculating? We're calculating our depreciation expense, and so the calculation looks exactly the same. So it equals the depreciable basis times the percentage for the year in question. So what's our depreciable basis? Still 120,000. Now we got to find the percentage. We're talking about year 4, okay? And this is very important. I'm going to expand up. Look at how this is labeled, okay? This is for the month the property is placed in service, okay? So when did we place this property in service? We placed it in service in July. So this is always going to be the column we use initially, all right? So for year 4, that 7 column is 2.564%, okay? That would be the depreciation for this building in year 4 if they had the building for the whole year, but they don't. Okay, so this is entire year 4. All right, but remember, they sell it in April. So we have to do this correction. So this right here is that full year depreciation, okay? So now we need to multiply this by the month in which the asset was disposed of minus 0.5. Well, when did we dispose of that asset? April 15th, okay? And what is April? April is the 4th month. So that's 4 minus 0.5 over 12, okay? That right there is this portion of that formula. That corrects the year of disposal for the mid-month convention, okay? So I'm going to slide that up a little bit. And then all you have to do to get the depreciation expense is going to be equal to whatever that formula comes up solved. So let's do that. I thought I'd stop my recording while I was doing the math, but I hadn't. That's okay. So that then corrects to $897.40. So this right here is our year 4 depreciation expense. Okay, so that is real property depreciation, and we will do some examples via Zoom in class. All right, take care, y'all.